We are at the PDAC here in Toronto, known as the world's largest mining convention. 30,000 people here, and joining me today is Jeffrey Christian, Managing Director of CPM Group. Jeff, good to be back with you.
It's great to be with you.
Now, before we talk mining, I'd like to talk about this gold fix study. Couldn't wait to get your thoughts on it. Bloomberg came out with a story earlier this week highlighting a study by the Stern business professor Rosa Metz and Moody's Albert Metz, claiming that the 5 banks that are involved in LBMA price fixing, twice-day fixing, were working together to manipulate the benchmark. Jeff, let's start by getting your thoughts on this study that came out and has been making a lot of waves in the industry.
Okay, first, I haven't seen the study. I saw the Bloomberg article. Second thing is, she didn't say that they saw that they were colluding. She said that if you looked at the price movements on either side of the afternoon fix, one saw unusual behavior that she could not explain without doing any research into the gold market that could have indicated some form of collusion by somebody. So that's a very spurious conclusion. Second thing you should know is that Rosa Metz, she joined Stern at NYU in 2009. Her career is a economist for hire for litigation. She's in the business of being hired by lawyers to prove statistically what their defendants, what their clients need. You know, and so anytime you have somebody like that, these are advocates as opposed to researchers, and they will find things that they want to find. I use the example in the 1980s, after the Hunt brothers were involved in silver, people were suing them and others for colluding to drive the price up. And in one of the lawsuits, there was an econometrician who presented the results of his study that the Hunts buying 65 million ounces of physical silver and a lot more futures added 75 cents to the price of silver.
No.
So when you see an advocate, an economist for hire, come up with a study that says, okay, there's some price behavior that I can't explain, you have to take it with a giant grain of salt.
But there could also be truth behind the study, right? I mean, what would this say about the industry?
Well, it would say bad things if there were any truth behind it. But what she was pointing to in the Bloomberg article, what they talked about, was that she saw that there were substantial changes after 2004, which she said she didn't know any fundamental reason in the gold market. And if you think about it, in 2004, the gold ETF was started. Gold prices had started to rise. Mining companies were starting to try to expand their production. Investment demand was rising sharply. You were moving into a period of unprecedented secular upward shift in investment demand and prices in gold. So there were all kinds of things going on in the gold market structurally that could report to it. The other thing that she talked about was that there seemed to be a lot of selling activity around the PM fix. Now, this is something we actually addressed in our 2012 Gold Yearbook, in which we were describing to people how it is that the afternoon fix in London tends to see a lot of producers selling because it occurs when the Americas are open, and the treasuries at the mining companies in North and South America, generally speaking, want to be at their office when they're selling. They don't want to leave offers overnight. So they tend not to sell in the morning fix, which occurs when the Americas are closed. They tend to sell at the afternoon fix.
Now, Jeff, I need to ask you, earlier in the year, we saw Deutsche Bank pull out of the LBMA price fixing, and a lot of people pointed that, saying, oh, they're pulling out because they were involved in this manipulation and whatnot. Did you think that was odd, that they decided to no longer participate?
It's a classic misinterpretation. Deutsche Bank was pulling out of all of its commodities. It was liquidating all of its non-precious metals commodities activities. It was severely scaling back its precious metals desk, which is much more than just setting the fix. So, Deutsche Bank had made a strategic decision, as did a lot of other banks last year, to get out of commodities. And once you're getting out of commodities, there's no reason to be a member of the fix. So to pick one thing out of maybe 5 dozen changes is just totally silly.
Finally, Jeff, we're at the PDAC. I had just come from the BMO Metals and Mining Conference where I felt there was optimism coming back into the mining space. Do you have a feel yet of what the sentiment's like on the floor here?
It's interesting. It's very similar to what we're seeing at other conferences. There is optimism. There were some real reasons for the optimism, but a lot of the optimism does seem overdone right now. It's almost a matter of belief as opposed to scientific inquiry into what's going on in the prices.
Jeff, I'll let you conserve your voice. Thanks so much for taking the time to speak with us.
It's always a pleasure.
And thanks for watching our coverage here at the PDAC in Toronto. We'll have more for you throughout the week. In the meantime, email us any comments or questions at newsfeedback@kitco.com. Thanks for watching.